All right, we're live. Good morning, everybody, and welcome back to Beat the Bell, presented by Kane Capital. Excited to have everybody back. Hopefully you're having a pretty solid trading week. We are getting into earnings season. That's going to be the main storyline as we continue to move forward. Let's go straight into our panel. Starting with Money Mander. Money Mander, good morning.
Good morning. Happy Wednesday, everyone. Earnings season is among us. Let's get into it. We got some data to recap.
All right. Diamond Trades. Good morning, Noah.
What's up, guys? What's going on? Like Alejandro said, we do have quite a bit of earnings to cover, and we'll hit on a few of those today in Fed forecasts.
And Stock Snipa, good morning to you.
Good morning. Happy Wednesday. Let's get after it, and let's make some money today.
Uh-oh, he's stuck. All right, let's take it right into Fed forecast.
Honda's frozen. That's fine. We'll take care of it. Let's start with the economic calendar. So the economic calendar for this week really does not have a ton as much as high impact news goes, especially today outside of crude and gasoline stocks at 10:30. We've got jobless claims, more housing data, and some Fed speakers tomorrow. And then on Friday, we've got some more manufacturing data. So pretty light week in terms of economic data. The focus is really on earnings. The market has really been slow out of the gate to start this week. We've had sort of a choppy start to the week with all three indices up anywhere from 0.2 to 0.5% after 2 days of trading. All indices trading lower here in pre-market, however. Devoid of high impact economic data, investors are sort of parsing through the most recent batch of earnings for any sector specific or broader market implications. Let's touch on a few of the big ones. So Goldman reported yesterday before the open. They actually dropped about 1.7% yesterday after reporting lower than expected revenues, in part due to their sale of the Marcus portfolio, which was really more focused on Main Street lending. Revenues came in at about $12.2 billion versus $12.83 billion expected. Profits came in at $3.23 per share for the investment bank, representing a negative 18% decline year over year, but still higher than Wall Street expectations. So Goldman actually beat on EPS and missed slightly on revenues. Goldman is a bit of an outlier when it comes to the big bank space. When you think of JP Morgan, Bank of America, Wells Fargo, those banks have very strong consumer segments. And so they were able to balance the drawdowns in their investment banking and trading divisions from March with their strong and sizable consumer divisions, something that Goldman was not able to do quite as effectively. Investment banking in particular is where Goldman shines, but increased rates and uncertainty in the economy, particularly following the banking crisis, really slowed down deal making, which hurt their investment banking sector in Q1. We can move over to Netflix. Netflix reported yesterday after the close. They reported an EPS of about $2.88 billion, which is the beat of Wall Street expectations from $2.86 billion, but down about 18.4% from a year ago, same time. They reported revenue of about $8.16 billion, slightly lower than the $8.18 billion expected, but up 3.7% from the same quarter a year ago. The stock dropped about 11% initially off the read, before recovering to near flat. And I think that they're trading down about 3% here, an hour before market open. So from down 11% to flat to down negative 3%, very volatile post-market for Netflix. Some of the highlights from the Netflix earnings report: first quarter under new management, right? Their co-founder, Reed Hastings, stepped down from CEO and moved to the executive chairman role, or executive vice chair, one of those two, in January. So this was their first quarter under new management and their new co-CEOs. Netflix was able to add 1.75 million subscribers in Q1, which was a highlight for them. The ad-supported tier continues to grow for Netflix, accounting for about 1.7% of U.S. subs in March versus about 0.8% of U.S. subs in December. And then finally, they announced that they're going to do away with their DVD service starting in Q3 of this year in September. The hallmark of the company that started about 25 years ago. This is a move that's like really representative, I think, and symbolic of the massive transition like this company has made from sort of that startup DVD shipper to a streaming conglomerate in the space. And so Yeah, that's about it from Netflix. Mander, what you got?
Yeah, I wanted to hit on Goldman. I think Goldman was in a position where they didn't get to benefit like a lot of these other big banks, as you noted, because they don't have a big consumer sentiment and outreach in banking, where you have JP Morgan, Wells Fargo, Bank of America. All of those really shined in earnings. And so I think that was kind of a down draw for Goldman. But that really wrapped up the earnings we saw. I wanted to cover the Tesla earnings and what we can expect today, reporting after the bell today. So this is going to be the first Tesla report since the 14 to 25% price cuts across their entire lineup. And I think personally, at least in recent memory, this is probably the most significant earnings report they've had, especially trading up plus 50% year to date. So FactSet analysts are expecting first quarter profit to fall to 2.6 billion, down from 3.3 billion a year ago, with revenues up to 23.6 billion from 18.8 a year ago. So obviously margins are going to shrink, but they're expecting revenues to grow as they maintain that market share of the EV space. So looking at that operating margin, Tesla has returned their prices for their two most popular vehicles back to 2021 levels, that being the Model Y and the Model 3, the cheaper ones, back when their operating margin was down at 12.1%. So analysts are kind of expecting that to be where they end up with their operating margin, with the prices at the same spot, which will be down from 19% a year ago, but still double or triple the competition. So Ford comes in right around 4%, GM right around 6%. So even down to 12%, Tesla is operating at double the margin of the rest of the entire space for the automotive manufacturers. But they just announced another $3,000 price cut overnight, literally coming in last night on the Model 3 and the Model Y, which to me, going right into earnings, was not something you would do if you saw the demand revitalized from the first price cut. So if you remember, they just gave out delivery numbers. They produced 18,000 more cars than they delivered on the preliminary numbers, and then just announced another price cut. So I don't know. We'll see. Tesla, it's going to be a big mover. It's definitely going to take the entire NASDAQ with it. I think this will be one of the big ones to give some guidance into the rest of the space. And then last but not least, Apple just announced a savings account. So coming right off of the new buy now, pay later, and alongside the Apple card that they give out, they just announced a 4.15% high yield savings account. So it looks like Apple is really trying to take over everything they already have their hands in. They're looking to take over this digital wallet space as well. And this 4.15% actually comes in higher than a lot of commercial banks. And so I think, alongside everything Apple is kind of rolling out here, I think this would be a good one to stack up their balance sheet and assets going into the earnings report coming up.
Yeah, so the Apple thing I find really interesting because they have a real competitive advantage over banks, not necessarily first of all, the 4% is 4%, right? Like you're not finding that anywhere at a bank. But I think even outside of that, like in emerging markets, I feel like it might almost be easier to just go with an Apple savings account, like trying to find a trustworthy bank or institution in your developing nation. If you're not going to use like a US bank, everybody on earth has an iPhone. They have like 2 billion customers. So it's, I feel like more people probably have iPhones than bank accounts. I would actually venture out, like, I don't know those stats for sure, but I would actually put my money on that.
Yeah, I would agree. And it's right off your Apple wallet with the Apple card. So the cash back you get on your credit card goes right into your 4.15% high yield savings account, all through your iPhone. It couldn't be more convenient. So I think this is probably one that does well.
Yeah, it is highly interesting. I'm excited to see how it plays out. I might have to try it out for myself. No more 0.35% APY from Chase. All right, that'll wrap it up for us here at Fed Forecast. Let's pass it back to Alejandro.
All right, boys. Apple handing out T-bills, baby. Straight into the system. Let's do it. So the theme has been buy the dip for the entirety of this month. Now, we've been in a slower grind higher over the past couple weeks, and it looks like we're getting pretty decent pullback here in the pre-market. But going back and looking at this 1 hour chart, this, guys, is the power of the system, and this is why I rely on it so heavily. Now, in these types of conditions, when the market is choppier and we're trading flatter and we're slowly climbing higher, it's going to be difficult to trade using the moving averages, right? But what we have seen repeatedly is that bulls have been able to step in and buy dips at support for as long as we've been trading above the 50 SMA on the 30-minute chart and the 1-hour chart. And so having that clearer picture of broader market trend, of that short-term trend on these higher time frames, to me is extremely, extremely important. So what I like to do is I like to come to these charts and I'm able to determine who has control, the bulls or the bears. Who is in favor? Where are my odds stacked more heavily if I'm looking for long setups or if I'm looking for short setups? This really helps me to determine that. And I know that when we're trading above the 50 SMA on the 1-hour chart specifically, that I can look for those long setups. And that is what I have been doing all month long. And I've been trading really well. And I honestly, thinking about it, cannot remember the last time I went short. So I might have, this entire month, I may have only been playing long. And yeah, I mean, making it happen. So you don't have to catch every move, but if you can kind of use something to help you determine, all right, can I look for long? Should I be more, focused on shorts? Then that alone can eliminate a lot of noise versus trying to time a move. Maybe you're trying to time a top, and then by the time things roll over, your options are down 50%. Or maybe you're just struggling, you're not getting any follow through when you're trading short and you're wondering why. Well, here's the broader market trend, all right? So that's going to continue going into today. We're watching the 50 SMA on this 1-hour chart and the 30-minute chart. Same story. We'll see if the bulls can buy the dip once again. Eventually that will change and it will turn and we'll trade below the 50 SMAs on both the 1-hour and the 30-minute chart, and bears will regain control and it'll be back to bears ball in the bears court for a little while, and maybe we finally get a healthy pullback, and then we'll see what happens from there. But right now, that is not happening yet. We're still trading above the moving averages, so we have to be mindful of that, and we have to respect what the system is telling us. All right. So now, for Beat the Bell, we've got a special host this morning. We're going over to Stock Snipa.
What's up, guys? We're going to be doing some Beat the Bell this morning. And, I'm pretty excited. This time, we might have a bit more banter. But first question I'm going to shoot is green or red? Diamond, what do you say? Wait, Ryan, can you pull up the stats?
Beautiful. Get the stats up.
Dun, dun, dun. No stats.
We don't have stats today.
So,
No
first question is going to be green or red? Diamond.
Yeah, I'll go. Red. How much are we down already? We're already down pretty fat here in pre-market, so I'm not really going out on much of a limb by saying red, but red.
Mander.
We are down.
Yeah, I'm going to take red as well. I think the weakness in megas brings the S&P down with it.
Hondo.
I'm going to go red as well.
Yeah, and I'm going to have to take red also on that one. I guess it's red across the board. But now, interesting question here. At SPY, we're sitting at 411 about right now in the pre-market. It could have changed since the last time I looked. But what comes first on SPY, 400 or 420? Diamond.
That's a good one. I'll go 420. 420. I think that this pullback is going to get people a little bit too excited. I'm sure the bears will come out of the woodwork again, the perma bears on Twitter that Alejandro beefs with and hates. And then we'll just get like a nice squeeze over those February highs, blow everybody out of the water, and bring it back down. 420.
Interesting. Hondo, I see you look a little excited to answer here. 400 or 420?
Dude, I don't know. This is a tough one, honestly, because I was just explaining the run-up and this buy the dip regime that we've seen for a month now, literally. I don't think we've had 2 consecutive red days in like a month. But yeah, I'm going to go 420. We'll go 420.
Awesome. Mander, 400 or 420?
All right, I'm going to say 400, but let me give you my reasoning, and it's not just because I'm the perma bear that Hondo hates. I think going into earnings coming up, we have 42% of the S&P reporting next week with Microsoft, Meta, Google, and then Amazon and Apple after that. I think a lot of these tech names miss, and we see some rotation back into financials. But just because of market cap, if the tech's selling and financials are rallying, S&P is going down. So I think we see 400 next.
Dude, I would
I
have
think
bet
they're
my
going to
car that you
surprise
said
you,
400.
Mander. I think they're going to surprise you. I think a lot of
Okay.
these companies got it down. The expectations are low.
We shall see. We shall see. I love earnings season.
It's fun. A lot of
Well,
food.
here's the interesting question of the day now. I'm going to go ahead and read out this tweet from Unusual Whales, but the Iowa Senate has passed a child labor law today that lets 14-year-olds work 6-hour night shifts, 15-year-olds work on assembly lines, and 16 and 17-year-olds serve alcohol per More Perfect Union. Now, guys, the question that I have for you is, do you think that 14-year-olds should be allowed to work 6-hour night shifts?
I know that at 14 years old, my father would have had no problem with me working a 6-hour night shift, and in fact, probably would have sent my ass to work. Probably would have made a joke about, you want to eat, you got to provide for this family too. I don't see a problem with it. You guys got to. I mean, at 14 years old, you're in high school. These kids are already smoking weed and drinking. Like, you can go to work.
Yeah.
Simon, what do you think?
Yeah, I agree to a certain extent. I think the real problem that people have with it is 17-year-olds allowed to serve alcohol. And I mean, to Alejandro's point, when you're 17, you're graduating high school. Like, if you don't think that your senior in high school has, seen alcohol before, you're probably a bit naive. I think the serving it part is where people get a little, fishy though, right? Like 14-year-olds, 15-year-olds, 16-year-olds working at a restaurant or wherever. Like that's what I did, right? When you're a sophomore, junior in high school, not everybody has the luxury of their parents, giving them $100 bill every week. Like, you got to go out there and go get it. So, I mean, I don't have a problem with that. I think the only thing that is sort of an issue is 17-year-olds serving alcohol. If you're not old enough to drink it, how can you be old enough to serve it? And people were saying, oh, well, you could just get like a parent's sort of cosign so that, it says, hey, my dad said it's okay for me to serve this alcohol, but that wouldn't work if you're trying to go buy, a 30 rack at the liquor store. Right. So it's a weird sort of concept. I really don't know how I feel about it, to be honest. I don't think I love it though.
Yeah, I agree. I think it's going to lead to more underage drinking and a couple of other problems there. But Mander, what's your take on this?
I'm definitely cool with it. Look, my dad in PA was 15 and a half. You could start working. My 15 and a half birthday, my dad walked me right into the school office to go get my work permits, and I was working. Like, I'm totally cool with this. It's not like it's indentured servitude. They're getting paid. It's regulated by hours you can work. I'm totally fine with this. I think working the earlier you can gives you an appreciation for the money and kind of what it takes to get it, and then you spend it accordingly. And so I think, 14, like Alejandro said, you're in high school, you're pretty much a grown man. People were married at 14 not too long ago. So, like, I don't think this is as crazy as people are making it out to be.
Yeah, I'm going to have to agree. When I was 14, I was working, and shit, when I was 17, I was definitely serving alcohol. Well, I don't know if it's considered serving it, but I was selling it. But whatever. Legally, not trapping alcohol or anything like that. But that's going to wrap it up for Beat the Bell today, guys. We're going to pass it on to Hondo now.
God, all right. Awesome conversation there. We're going to do trade of the week now.
It's time for America's Trade of the Week.
Now, here's a guy who knows how to trade stocks.
All right. That's me, the guy that knows how to trade stocks. So we're going to talk about the only trade I've taken this week. This was a long that I took on Monday. So earlier I talked about the buy the dip theme that we've been seeing in the market. So how do you know whether you're going to catch a falling knife and whether or not you're going to break down to your support, or if that support is going to hold? And the answer is You have no fucking idea. So how can you increase your odds? A setup that I really like to trade is the false breakdown. So 4160 support on ES. What you see here is a move below that 4160 level. We come down, we test 4150, which was next support down. Then you get a reclaim of that 4160, which is where I went long, targeting 4174 and 4180. And then, of course, we got the move overnight up to 4198. So this trade ran about 35 points. But again, the theme or the lesson to be learned here, the setup that we're discussing, is this false breakdown. And I think that this setup recently, if you go back and look at the chart, has been popping up everywhere. And it also works the same way when you get a false breakout. So yesterday we got a false breakout. We broke over the recent highs, that 4186 level on ES. We ran up to test the next level, which was 4195. Then we come back down below 4186. Now, again, it would have been the question of how do you know when to short? How do you know that your level of resistance is going to hold? You don't. So how can you increase your odds? You can play that failed breakout. And those are the types of setups that I really like looking for. That's the trade of the week so far. Hopefully we have an even better one for you guys on Friday. And I believe that's going to do it for this morning's show. Appreciate everybody who tuned in. Light crew once again. Ramsay is sick. Moe is on a religious trip to Saudi. So we're doing the heavy lifting here. Wanted to make sure that we got you guys the show nonetheless. Hopefully, again, you guys are having an awesome trading week. We'll be trading live all day in the Kane Capital Discord. You can go to kane-capital.com to trade with us. We've got the 7-day free trial going. Other than that, have a great rest of your day, everybody, and we will catch you guys on Friday morning at 8:30 a.m. Eastern Time. Have a good one, everybody.